Ever noticed how the rich keep getting richer? It's like they're playing a different game, right? But what if you could learn the rules of that game? What if you could master the same rules that the wealthy use to build and maintain their wealth? In today's video, we're going to pull back the curtain and reveal these rules. We're talking about understanding money, investing strategically, generating passive income, and embracing FinTech. We will guide you on how to use these rules to our advantage. Before we get started, if you're new here, make sure you subscribe and hit that bell icon so you don't miss out on our next videos. So money, it's a word we hear every day, right? But do we really understand what it is? I mean, yes, it's a piece of paper or a number in your bank account. But it's also a tool, a resource that can provide freedom, security, and opportunities. But to truly master money, we need to understand how it works. Firstly, money is a medium of exchange. It's what we use to buy and sell goods and services. Imagine trying to barter in today's world, It would be incredibly inefficient. Money solves this problem by providing a universally accepted medium of exchange. Secondly, money is a store of value. It allows us to save and use it in the future. And this is crucial because it gives us the ability to plan for the future, whether it's saving for a rainy day or planning for retirement. Now, understanding these functions of money is just the first step. To truly master money, we need to understand its value. And no, I'm not talking about the number printed on a banknote or coin. The value of money is determined by what you can do with it, that's right. You need to understand that every dollar spent is an investment, whether you're buying a coffee, paying your rent, or investing in stocks. As Ayn Rand once said, money is only a tool. It will take you wherever you wish, but it will not replace you as the driver. Moving on to the second rule, saving. I know it might sound old-fashioned in this age of instant gratification, but trust me, it's one of the most powerful tools to accumulate wealth. There is a misconception that saving money means depriving yourself. You know from the things you love. But the reality is, it's not about deprivation. It's about prioritizing your spending and making conscious decisions about where your money goes. Think about it this way. Every time you get paid, a portion of that money is yours to keep. Not for bills, not for rent, but for you. This is the money that you save. It's your safety net, your ticket to financial freedom. Now, how much should you save? A popular rule of thumb is the 50-30-20 rule, where 50% of your income goes to needs, 30% to wants, and 20% to savings. The actual amount you save depends on your income, expenses, and financial goals. If you want to know more about this saving rule, we suggest you watch our video on how to manage your income, the 50-30-20 money rule explained. Let's consider an example. If you save just $5 a day, that's $1,825 a year. Now, imagine if you invested that money. Over time, thanks to the power of compound interest, your savings could grow significantly. For those who don't know, compound interest is when the interest you earn on your savings also earns interest. But where should you keep your savings? A regular savings account? A high-yield savings account? A retirement account? The answer depends on your financial goals. If you're saving for short-term goals, a regular savings account might be enough. But if you're saving for long-term goals like retirement, you might want to consider accounts that offer higher interest rates or tax advantages. And never forget about the emergencies. You know, life is unpredictable, and having an emergency fund can give you peace of mind. According to research, it's recommended to have 3 to 6 months' worth of living expenses in your emergency fund. This money should be easily accessible, like in a savings account, so you can get to it quickly when you need it. But let's be honest, only saving won't make you wealthy. That's where the rule of investing comes in. It has been proven to be one of the most effective ways to grow your wealth. The key to successful investing is understanding your risk tolerance and investing in a mix of assets that align with your financial goals. You can start with some traditional options, like stocks. When you buy a stock, you're buying a piece of a company. If the company does well, the price of the stock goes up. But if the company doesn't do well, of course, the price of the stock goes down. Another traditional option is the more stable bonds. When you buy a bond, you're essentially lending money to a company or even the government. In return, they promise to pay you back with interest. The returns on bonds are usually lower than stocks, but they're also less risky. How can we forget about the most popular investment option? Real estate. You know, buying a property to rent out or investing in a real estate investment trust, REIT. Real estate can provide a steady income stream and potential appreciation in value, and there is cryptocurrency on trend nowadays. It's a virtual currency that uses cryptography for security. Cryptocurrencies like Bitcoin and Ethereum have seen massive growth in recent years, but they're also highly volatile and risky. There are some more latest investing trends as well. Last year, artificial intelligence, AI, took the investing world by storm. Investing in AI-related stocks could potentially boost your portfolio in 2024. Another trend to watch out for is the comeback of biotech stocks. You know, with falling rates and increasing deal-making activities, biotech stocks are expected to make a comeback in 2024. Moving on, the fourth rule is probably the most important as it helps spread the risk. Diversification. It's like having a mix of assets like stocks, bonds, real estate, and even alternative investments. It also involves geographic diversification, which means investing in both domestic and international assets. If you're thinking, why diversify? Well, different investments react differently to market conditions. By diversifying, you spread the risk. In more simple words, if one investment performs poorly, another might be performing well, helping to balance your portfolio. Last year, investors who diversified their portfolios were able to mitigate some losses during a challenging market environment. Diversification wasn't a magic bullet, but it did offer some benefits. For instance, a diversified portfolio composed of 11 different asset classes performed better than a basic 60-40 portfolio, comprising U.S. stocks and U.S. investment-grade bonds, in 2023. Another trend is the growing interest in alternative investments. These are investments outside the traditional categories of stocks, bonds, and cash. They include private equity, hedge funds, real estate, commodities, and cryptocurrencies. So, alternative investments can offer diversification benefits because they often behave differently than traditional investments. So, diversification helps us manage risk. But wouldn't it be great if we could earn money with minimal effort? That's where our fifth rule, passive income, comes in. As Robert Kiyosaki puts it, the key to financial freedom and great wealth is a person's ability or skill to convert earned income into passive income. If you don't know, passive income is the money you earn with little to no effort. Yes, it does sound like a dream, but with some upfront effort, it can become your reality. Passive income can come from various sources like rental income, dividends from investments, or royalties from a book. The more sources of passive income you have, the more financial freedom you'll enjoy. Investing is a common way to generate passive income. When you invest, you're putting your money to work for you. For example, investing in dividend-paying stocks can provide you with regular payouts, but make sure to do your homework. Some companies don't pay dividends. Building assets is another way to generate passive income. One of the most traditional methods is through real estate, as we discussed earlier. Sharing assets is another way, which involves making money from assets you already own. This could be anything from renting out a room in your house to make money from advertising revenue on a blog or YouTube channel. Take the case of Mike, who rented out his spare room on Airbnb. This passive income now covers his monthly mortgage payments. Now, there are some latest trends in passive income for 2024. Online courses have become a popular way to generate passive income. If you have expertise in a particular area, you can create an online course and sell it on platforms like Udemy or Coursera. And once the course is created, it can continue to generate income with minimal maintenance. Affiliate marketing is another growing trend. This involves promoting other people's products and earning a commission for each sale made through your referral link. Next up, financial technology or FinTech. This is changing the way we handle money, making it an essential rule to understand and embrace. FinTech includes everything from mobile payment apps to cryptocurrency, and it's literally changing the rules of finance. In 2024, one of the biggest trends in FinTech is the rise of artificial intelligence, AI, in financial services. As we discussed in the third rule, AI is being used to automate trading, improve risk assessment, and even detect fraudulent transactions. By understanding and leveraging AI, you can stay ahead of the curve. Another major trend is the growth of real-time payments, RTPs. They're like instant 24/7 interbank electronic transfers. This means you can transfer money to anyone, anytime, and anywhere. So, no more waiting for bank business hours. So understanding and embracing these digital assets and technologies can open up new opportunities for investment and wealth creation. Well, that's it for today. The rules of money you need to master to become wealthy. If you enjoyed the info in this video, we'd love to hear from you. Are you excited about any of the money rules we discussed today? Do you have any other rules of money that you swear by? Or perhaps a personal experience you'd like to share? Drop your comments below. And before you go, don't forget to check out our video on where to invest your money in 2024 vertical bar best investments for long-term wealth. Make sure you hit that subscribe button and press the bell icon. Thanks for watching.